Hello, this is Rich Canleone coming to you from the CME Group trading floor. Today's segment is going to be called the non-farm payroll growth or not. Obviously, in the last several days, we've seen a lot of the economic releases that have affected the U.S. equity markets and some of the risk markets around the world as well, show that there has been a slowing in the expansion that we've seen since basically roughly mid-2009. The most recent, I should say, economic releases that we're looking at, of course, is obviously the ADP number. The ADP number is essentially a forecaster of not only the jobless claim numbers on Thursday that we're looking at being 417, but also the mother of all numbers, this Friday non-farm payroll being 180,000 is what the street is looking for. And the market is kind of retracing its steps on that, looking for support, particularly the S&P market. If you recall, we had the high in May on the Bin Laden capture, and that was 1373.5, just to throw some technicals at you. Going back, then we had a low, which was on the concerns on Europe and Greece and so forth, and that got us down to 1302.25. Interestingly enough, 50% of that, I know you guys like to look at retracements because a lot of times the market trades very mathematically. 50% of that got us to 1337 and change. We've been holding that for a while. It's not necessarily what people would refer to as an 8-day moving average or a 50-day moving average by any means, but it's just a mathematical retracement from that high and the low. That works not only on monthlies, on weeklies, it also works on dailies. Let me bring your memory back to the day of the 23rd, where we actually had a breakout of double tops, which was at 1327. That is what this market is targeting today, because obviously at this point the market is looking for where it is fairly valued based on growth, economic growth, consumption growth, and particularly the catalyst being the ADP number this morning that was incredibly out of line with survey. So on the pullback, I would be looking to go ahead and initiate a near-term long in the 1327 region. We had a double bottom again at 1327, 27.5. And of course, the low that we established on the 25th, which was 02 and change, we on that day closed above that 50% of that day's range, which was 16. Okay, so 27 area is going to be key. The 16 area is going to be key. If you take those out, you don't even want to look at the 50-day moving average, which comes in under the figure. I think that's what this market is planning to do. And again, the catalyst being the ADP numbers and the numbers that we've seen as of late. Trade them smartly, because I think when you get to those levels, you're bound to see a little bit of a bounce. Obviously, the HFT trading system are going to realize that that is a double bottom area because it'll suggest a lot of volume. We're going to get to those levels, trade those levels smartly. We should see a bounce again at 27, and if we take those out significantly, 16 area we should hold on to for the time being as the market looks for fair value. Have a good trading day. Trade those numbers smartly. Thank you again. Rich Canleone signing off from the CME Group trading floor.